Alright, picture this. You see a stock that is absolutely rising. It's up 10%, 15%, 20% on the day, and your heart starts pounding. That little voice in your head screams, "Oh my God, everyone is making money but me. I have to get in now before it's too late." So you jump in. You buy way more than you should, completely ignoring that tiny, rational part of your brain. For a split second, it keeps going up, and you feel like a certified genius. Then, the reversal hits, and it is fast and brutal. That beautiful green profit vanishes into a sea of red. Panic sets in. Your palms are sweating. So you sell. You dump everything at the absolute bottom, right before it bounces back. You just let two of the most powerful primal emotions, greed and fear, hijack your brain and detonate your trading account. If that hits a little too close to home, then you need to stick around. Because today, I'm going to show you the structured trading plan you can use to finally disconnect from the emotional roller coaster and start trading with cold, calculated consistency. So what exactly are fear and greed when it comes to trading? Let's be clear, we're not just talking about feelings here. These are deeply wired biological responses tied to our brain's survival and reward systems. Fear is your brain's alarm system against threats. In trading, the threat is losing money. This triggers a fight-or-flight response, which causes you to hesitate on perfectly good setups, panic sell during a normal pullback, or close a winning trade way too early just to lock in a tiny gain. Fear is what makes you sell the low and then watch in agony as it recovers without you. Greed is the other side of that coin. It's driven by the brain's reward system, that insatiable hunger for more. Greed is what fuels overtrading, where you start taking sloppy, low-quality setups because you're still high off a recent win. It's what convinces you to use dangerous amounts of leverage, turning a small mistake into an account-ending catastrophe. Greed is the engine behind FOMO, the fear of missing out, which makes you chase stocks that have already gone vertical and buy at the absolute worst prices. It's the voice that whispers, "Ignore your risk rules. This is the one." And these emotional reactions don't just mess with you. They scale up and infect the entire market. When millions of traders are acting on fear, you get market crashes that fall way faster and further than the fundamentals would suggest. When greed takes over the collective mind, you get those absurd, logic-defying speculative bubbles. We can actually measure this. Tools like the CNN Fear and Greed Index track things like market momentum, options activity, and the demand for safe haven assets, and then distill it all into a single number from 0 to 100. A low number means extreme fear is dominating the market, while a high number signals extreme greed. This index is living proof that the entire market is constantly swinging between these two emotional extremes. These two emotions tend to show up as a few distinct, destructive behaviors that are probably responsible for something like 95% of all trading mistakes. I call them the four horsemen of your trading account's apocalypse. First, we have loss aversion and the sunk cost trap. Here's a psychological truth. The pain of losing $1 feels way more intense than the pleasure of gaining one. This bias, loss aversion, is why so many traders cling to a losing position, just praying it will come back to break even. They refuse to take the loss. The more money it loses, the more committed they become to this sinking ship, a cognitive trap called the sunk cost fallacy. Instead of cutting a small, plan for loss, they let the fear of being wrong turn it into a devastating one. The second horseman is premature profit-taking. This is fear wearing a different mask. You're in a great trade. It's going exactly to plan, but then it pulls back just a little. The fear of watching that green P&L turn red becomes completely overwhelming. So you smash the sell button, capturing a tiny sliver of the potential gain. Locking in a win feels good in the moment, but this habit systematically murders your profitability. If your wins are always tiny and your losses are big, you can't make money, even if you win 80% of the time. The third horseman is one we all know and hate, the FOMO chase. The fear of missing out is a toxic cocktail of greed and social pressure. You see a crypto coin or a stock exploding on social media, with everyone posting screenshots of their massive gains. You feel like you're being left behind. This triggers an impulse to dive in, usually with zero analysis or respect for your own rules. You end up buying late into a rally, at the point of maximum financial risk, and in doing so, You become the exit liquidity for the smart money that got in early. Missing an opportunity costs you nothing. Forcing a bad trade out of FOMO can cost you everything. And finally, the most dangerous horseman of all, revenge trading. After a big loss, or even a string of small ones, anger and frustration can completely take over. You feel like the market wronged you, and you get this burning compulsion to win it back immediately. This is when all rules go out the window. You double your position size, take sloppy setups, and trade impulsively just to force a win. Revenge trading isn't trading. It's just gambling with a bruised ego. It's a downward spiral that almost always leads to even bigger financial and emotional damage. So how do we defeat these horsemen? Here's the secret. You don't fight emotion with more emotion. You fight it with structure. You need a systematic, rules-based approach that yanks your feelings out of the decision-making process. Here are the 4 pillars of an unbreakable trading system. Pillar 1 is the written trading plan. This is your personal rulebook, and let me be clear, it is not optional. Before the market even opens, you need a document that defines your exact entry and exit criteria, the specific setups you trade, and the conditions for execution. A plan turns trading from a reactive, emotional mess into a disciplined, proactive process. When you have a plan, you aren't guessing or trading based on a feeling. You are executing a predefined strategy. If it's not in the plan, you don't trade it. Period. Pillar 2 is your non-negotiable risk protocol. The absolute easiest way to dial down the emotion in trading is to reduce your trade size. You have to define your risk before you enter any trade. A classic rule among pros is the 1% rule. Never risk more than 1% of your total trading capital on a single trade. This one rule changes everything. When the most you can possibly lose on one trade is just 1%, no single outcome can cause an emotional meltdown. It makes a loss feel like a small, manageable business expense rather than a personal attack, which is key to staying objective. Pillar 3 is automating your discipline with orders. Let's be honest, our willpower is notoriously unreliable under pressure. That's why you have to use technology to enforce your own rules. Before you even think about clicking buy, you must know your exact exit points for both a loss and a profit. Then, you place a stop-loss order and a take-profit order the moment you enter the trade. This automates your exit plan and removes the single biggest point of emotional failure, making a decision in the heat of the moment. By setting your orders beforehand, you prevent your future, emotional self from sabotaging a good trade. Pillar 4 is the postmortem, your trading journal. A journal is not just a spreadsheet of your wins and losses. It's a tool for building self-awareness. For every single trade, you need to log the technical details, sure, but more importantly, your emotional state and your why. Why did you take this trade? What were you feeling? Did you follow your plan to the letter? If not, why not? Over time, your journal will reveal your patterns. It will shine a spotlight on exactly where and how fear and greed are sabotaging you, allowing you to finally identify and fix those destructive habits. While these pillars are universal, how you apply them needs to be tailored to the market you're in. For day traders, you're dealing with pure chaos. The primary enemies are speed and wild intraday swings, which amplify every impulsive decision. Because you're making rapid-fire decisions, a pre-market checklist is your best friend. Before the opening bell, you review your plan, your setups, and your max daily loss limit. A hard stop loss on your day, say, losing 3% of your account, is non-negotiable. If you hit it, you shut down the platform and walk away. That one rule prevents a bad morning from spiraling into a revenge-traded blown account. For crypto traders, the challenge is the relentless, 24/7 nature of the market, which is a perfect breeding ground for FOMO and panic. Because the volatility is so extreme, using lower leverage and wider stops is crucial to avoid getting liquidated on a normal price swing. And while the Crypto Fear and Greed Index can be a fantastic tool, it should be used as a filter, not a trigger. When the index shows extreme fear, it might be a good time to look for buying opportunities in projects that already fit your plan. When it shows extreme greed, it's a flashing red warning that the market is overheated, a time to be cautious, not to FOMO in. For forex traders, the biggest danger is the easy access to insane amounts of leverage. Tiny emotional mistakes can get magnified into catastrophic losses. This means strict, meticulous position sizing is everything. Your risk must be calculated on every single trade. And because forex is so heavily driven by macro news, your plan has to include rules for how you trade, or don't trade, around major economic data releases. This keeps you from making emotional bets on the news and keeps you focused on your proven technical setups. If you are still watching, you are serious about leveling up as a trader. At Inner Pips Trading Psychology, we focus on mastering the mental side of trading. Leave a comment telling me about the worst fear or greed-driven trade you've ever made. There's zero shame in it. We have all been there, and sharing these stories helps everyone realize they aren't alone in this battle. Fear and greed aren't your fault. They are hardwired into your biology. But letting them dictate your trading decisions is your responsibility. The market is a relentless environment that is designed to prey on emotional reactions. The only way to survive and actually thrive is to build a fortress of discipline around your execution. A structured, rules-based trading plan isn't just a friendly suggestion. It is the only path to achieving long-term consistency. Stop gambling with your emotions and start trading like you're running a business. Your plan is the key to finally silencing the noise, allowing you to execute with cold, calculated consistency and achieve the results you actually deserve.